Hello, I'm Andrew Keane from Edison. Joining me today is Michael Steinmann, President and CEO of Pan American Silver, to discuss the company and its outlook. Michael, welcome.
Thanks for having me.
Let's start with the big picture, in terms of where you see Pan American in maybe 3 to 5 years' time. You've had a series of transactions and a series of growth options. How do you see the future in the broader sense?
Yeah, it was a really interesting time, the last 5-6 years, 3 large transactions that really kind of brought us to a completely different level. Still the second largest silver producer, of course. We still hold the largest reserve and resources in silver, but we also produce quite a bit of gold from some of the transactions. So very interesting where the company stands right now. Obviously exactly in the right time now with silver and gold price at an all-time high. And I kind of see this theme to continue the next few years. Obviously I will try to do what we did before, adding larger, longer life, high quality assets on one side and then selling off the smaller ones on the other side. That's easier said than done often. And there are different ways to do that. We have a few very, very interesting internal opportunities, growth opportunities that we can follow, that we can do it this way. Or, maybe other acquisition opportunities come up and we can use our very strong balance sheet to do that as well. So really looking forward to the next few years.
Do you have a preference, in terms of gold-silver mix, in the long run, or is it more about the quality of the opportunity?
Well, it's called Pan American Silver for a reason. Obviously, it's a company with the strongest exposure to actually the silver price. You produce always some byproducts, right? Silver doesn't come alone. It comes with gold or it comes with base metals. We produce zinc, lead, and copper as well as a byproduct, and obviously gold. And there's a few gold mines in there as well that came with the acquisition of Yamana Gold. So silver, a really critical, important metal here, and us being the second largest primary producer in the world, of course, that theme will continue. But it's also incredibly important to build and acquire high-quality, long-life assets like the last acquisitions we did. So at the end, the quality of the asset is always number one for me, but of course with the focus on silver.
Let's talk about your growth pipeline. You've got some really interesting growth options there with Skarn and Jacobina. How do you think about rating those and prioritizing those, in terms of NPV or cost impact or capital requirement?
Yeah, they're completely different actually. When you look at it, they're a bit different in timing, different of capital that is needed. Jacobina actually our biggest cash flow right now, as you can imagine, gold still outperforming silver. A great gold producer in Brazil that right now has a mine plan until 2051, so this is a large resource, a large reserve. We have been very successful adding more resource and reserves every year, and we're really looking now how far can we bring that asset, how much can we expand it in the future, how big can this grow. Currently we do about 200,000 ounces, very low cost, so it's a very interesting opportunity for us. So we come out with the optimization study somewhere probably in Q2 or Q3 next year, to see how that evolves, and it will be a long, there will be a long pipeline of changes we're going to make to this mine, but definitely trying to bring some of these ounces that are far in the future, bring them closer and take advantage of the current price environment. The Skarn is a different situation really. We discovered a world-class deposit below one of our best silver mines in Mexico, La Colorada. Deep down, very, very large ore body. Silver mines tend to be smaller. This is really a big silver mine at the top. Up below as a source is a Skarn, a very, very large zinc deposit with a lot of silver in it, which was the feeder from the structure for the structures on the top. So mining that is going to be a very big mine. We just announced that we actually found a way to stage our way into this. Stage 1 probably be in production hopefully in about 5 years from now. We'll transform La Colorada from the current 2,000 ton a day high-grade vein silver mine to probably about 10 to 12,000 ton a day larger but still high-grade opportunity for us, more than doubling our silver output for quite a long time. And then stage 2 will finally go down at the bottom of those big ore bodies and start a cave mine there, and that will run probably for 20 or 30 years after being a very, very large zinc deposit with a really, really large silver production as well. So way more capital needed for that one, obviously, than a Jacobina, longer time frame as well, and a way longer mine life as well.
Have you finalised that staging of skarn, or you've got some more studies coming in 26?
Yeah, so we're just working on the PEA. So PEA should come out in Q2, probably earlier Q2 next year, and that will give way more clarity. But that staging is really an interesting opportunity because we're about half the capital than we at the beginning when we envisioned the big addition to La Colorada. That's skarn. It was about a $3 billion build. So stage one will only be about half of that. So still big, very large silver production, but less capital and faster production start.
And talk about your MAG acquisition and Juanicipio. How's it going? How is it impacting on your production and your cost profile as well?
Yeah, and this is very recent. It just closed actually in the beginning of September this year. A different transaction than what we do normally. We bought actually a minority stake, a 44% stake in the Juanicipio mine in Mexico, which is run by First Neo, a very large silver producer in Mexico. Great mining company, and I'm very happy to be in a joint venture with them on that asset. This is the biggest silver district on the planet, full stop. Right? The First Neo district has produced about 4.5 billion ounces of silver over the last 400 some years. And there are still 3 world-class deposits there in production currently by First Neo, and one is Juanicipio. So having us there and as a 44% partner, it's a great joint venture. Only 1 month, obviously, we had in Q3, but you saw a little glimpse what's going to happen. It's going to be our biggest producer for silver, but our lowest cost producer as well. And just that 1 month lowered actually our corporate-wide silver production cost by over $2.
It's a great time to be a precious metals producer. So you've got strong cash generation. How does that make you think about capital allocation? Do you think, how do you balance off your growth projects versus balance sheet or dividends or any other uses of cash?
Yeah, as you say, this is an exceptional time in the silver and gold space. And obviously, we generate so much free cash flow. It was over $250 million in Q3. As I said, there was only 1 month of Juanicipio in there, and Q4 has even higher metal prices than Q3. So I would expect that number, in Q4 to increase substantially again. So obviously, want to make very smart capital allocation decisions, but we don't need to balance really and focus on the exploration or focus on dividends because there's enough cash available to obviously return to shareholders. We just increased the last 2 quarters. Every quarter we increased our dividend by about 20% every quarter. We have a dividend policy which actually the payout depends on our net cash holding. As you can imagine, our net cash is increasing very rapidly, and so dividend will just continue to increase. So that's a return to our shareholders. We do some share buybacks. We could not really buy in Q3 because we were in a blackout due to the transaction, but can buy again from now on. And then, of course, invest in those great projects that I just mentioned. So there's enough cash obviously available. What we need to do sustaining capital. We spend probably over $100 million in exploration. We have been very successful. Skarn is one of the result of that. And so there is enough cash obviously available to do that, and at the same time continue to increase our balance sheet, which, when you look at opportunities, maybe now, maybe later in the market, it's a very important fact to have that strong balance sheet, a lot of cash available, very little debt, to be able to react on opportunities immediately.
A really difficult question. When prices are high, it's always difficult to know how long they stay high for. Does the current sort of rise in precious metals prices make you rethink things like mine planning? Does it have any sort of fundamental change to the way that you think about the business?
Yeah, prices you use for your reserve estimate are very crucial. You don't want to stay too low because you're going to high grade your mines and shorten the life. You don't want to go too high because at the end you want to create a big margin that is really available now, and so you have to be really careful where you set that price. This is a very complicated environment where we have very fast rising metal prices to actually pin down that metal price, and that really dictates at the end what's the grade you're going to have you mine, how many ounces you're going to produce, and has a big impact on your cost, obviously, when you have a higher or lower grade on the production. So definitely an impact there, but we try to be very conservative on the prices. We don't have one fixed price. It matters a little bit how much life we have left in an asset. If there's only a short mine life, you obviously want to optimize every dollar taking out of the mine, so you go with the higher metal price in there. But over longer term assets, we have probably about $2,000 gold price and $22 silver that we use for the reserves. So there will be enough margin left, and we see that if you have time. The viewers could have a look on our corporate presentation. There's a nice slide in there that shows just the last 7 or 8 quarters how these margins actually increase, which obviously I've never seen in my career. So, yeah, very very important what metal price you use for all your planning purposes. But at the end, our job is to produce the metal as much as we can and as at a low cost as we can, and keeping cost under control, even in an environment like that, is obviously the other crucial component of my job.
Michael, thank you very much for joining us and sharing the Pan American story. For any further information, I refer viewers to the Edison website. Thank you.